Hello everybody and welcome to this month end debrief where we'll be looking at a 200 tick breakdown and reversal. We'll have a look at the entries and exits, how they coincide with our plans, and also I think it's important for this session is also just to go through a little bit what the month end is and why it's important. And let's just crack on to the next slide and go through that then. Okay, so what is month end? Month end is rebalancing. A lot of funds, indices rebalance towards the end of the month. Sometimes they've got fixed dates, like the MSCI, I think rebalances around the 20th of the month. But others have got a mandate to do it by the end of the month. So it's worth, being aware of when those big indices rebalance, and most of the big funds, they rebalance at the end of the month. So in this case, we're going to be focusing on the end of the month. The rebalance happens across all assets, but the ones I really focus on are the equity markets, the fixed income markets, and the currency markets. The crux of it is basically as markets move around, the portfolios, the assets held within portfolios appreciate or depreciate, and this creates an imbalance relative to the predetermined mandate, and funds need to reallocate or redistribute their assets so that their weights are in line with what they had agreed with their investors. So that's basically the crux of it. So what I tend to look for is I look for large moves that have taken place throughout the month, and whether or not we are trading at the extremes far away from where the month started. That's kind of the crux of it. So I don't want to be trading markets that are very balanced and haven't really moved very far away from where they started the month. I want to trade months with a view. I want to trade months. I want to trade products with a view that have moved sternly away from their origin, their monthly origin, the open, and that's kind of the crux of it basically. I've posted a lot of articles regarding this. It's something that I trade. There are some stats about this as well, and there's a lot of literature out there as well. So it's definitely worth you guys having a look, doing your own research, and coming up with your own plan or a way to trade these events. But a lot of the rebalancing happens throughout the day. Tends to kind of kick in after the after data. When the liquidity starts picking up. So they'll use a lot of liquidity that comes in after Chicago PMIs, that kind of thing. But yes, after the big data events, that's kind of where you want to see the flows start to kick in. They kind of die down a little bit, and then you see a big spike into the closes. So hopefully that makes sense. But that's the general crux of it. But without just understanding what might happen, we need to really understand the technical picture. So let's have a look at what was going on in this particular month for May. So we were we had this double distribution. There's the first week. There's your second, third, and fourth week. So we've got this gap at the bottom around 57.80-ish. This is also very much balanced. The last few weeks we've just been balancing up around here, so we've been kind of chopping up and down, and we're just waiting to see whether or not this inside week could break out of the prior week's balance. The key areas that we were kind of focusing on, we usually focus on, are things like VWAP, POC, and the value areas. Value area high, value area low, and the extremes, usual stuff. So let's just also just highlight what we got. We've got this unfilled gap. We've been holding underneath last week's POC. The monthly POC is 59.20. That's a key area that we're going to focus on in our execution, and also the thesis behind the trade is that below this POC, longs are in danger of liquidation and moving back towards its origin, which is down here, the month open. Those are the key areas that we're looking at. Weekly value area low is 59.02. I think I've got it marked out as 59.04, but somewhere around there. And the value area high is 59.32. So important. These were all marked out well before the open, and we can have a look at that as we just take a look at that day's prep for the day. So it's really important to make sure that when you're doing your debriefs, that you know, how did your plan and your analysis play out? Were you over optimistic? Are there things that you missed? But you can only really relate to what went wrong if you can have a look at what your plan set out to do, and you can have a look at my plan. Ignore most of it, but there's basically at the bottom I'm kind of highlighting the fact that I'm expecting, because of month end, expecting for a move below the monthly POC, which is marked out at 59.21, with potential shorts, as in I was expecting it to potentially hold and accelerate around 59.04, and then the target would be somewhere into the gap that we were just mentioning. And you know, a nice area to look for an exit is, oh, hang on, we've skipped a bit there. Go back there. The area that we're kind of really highlighting, looking for an exit, is we break out this 3-day balance, which we were trading in. I'll go through that a little bit more in the structure that we were trading in, just going into it. But the idea is that basically we would hold these 59.20s, and then we would move down, take out the 3-day value area low, 59.04, and then we would end up accelerating to the downside. And my target would be somewhere into this gap. This gap starts at 58.68. We've got this prominent naked VPOC here, which was at 58, and anywhere down there into the final gap low, which was around the 40 something, 43, I think. That's where you want to kind of be looking to exit. So that was the plan. Just having a quick look at the daily profiles. I've bunched up these 3 daily profiles to make a combined profile, what are they called? I forgot what they're called now. Composite profile. So we've created a composite profile here because the last 3 days price action was pretty much balanced. We can see that values shifted higher, and we're kind of the 3-day balance is kind of right on the monthly POC as well. There it is, around 21s. You can see that there's a lot of volume that's been kind of accumulated this area here. And my thesis would be that below it, into the month end, we would kind of step down. Now, this plan was posted well before the open. It's not something that we do after the event. This is the pre-open. This is the pre-open plan. Feel free to have a look at this. It's out there on Twitter as well. Go and have a look at it. But this area of this 3-day balance was also trading in a prior balance, highlighted by this purple area. But overall, market extremely balanced. And we were looking for this flow to take effect with a move back towards the month open. Okay, so let's just have a look at actually what happened. We're going to have a look quickly. This is just looking at the profiles. We've opened them up. We can have a look. A period, what did it do? Well, it basically open tested and then it drove down. Failed to take out the prior low. I think that might have caused a few shorts to scatter, cut reverse, and then we kind of rated back up in B period. But B period failed to take out the price settle. So basically you've got A's who couldn't take out the prior low. You've got B's who couldn't take out settle. So you've got a failed test into the price settle, and we failed to take out the prior low. So you're kind of a little bit trapped here. Then we kind of, in C period, we kind of just break out and we touch that 21 zone, which was the 3-day value, 3-day point of control. And it was the monthly point of control, and it basically pretty much touched it to the tick. That was a short opportunity. Trade taken there, and then it rotates down into D period, but only gets down to that other area that we're kind of focusing on. 59.04 is a 3-day value area low, and it kind of then bounces. This was a little bit worrying, but there was a good few ticks in that there. As it bounced back up, if you did manage to hold, you were never in danger. D period never took out C's. But then we start to hold. It's quite rotational, but at some point I basically called out that I expect this to start to hold, and I was looking in particular this 59.07 area to hold, and then it did start to hold, and then we got this liquidation lower. Now there was a lot of negative news in the market, not overly negative, but just a few niggly things that were coming out at the same time, and I feel that maybe that might have played into our hands. But overall, you got to take your trade, and then it's not really luck. If there's news that kind of plays in your favor, then that's just the way it goes. Anyway, so we start to hold, and then we have this liquidation. Now the expectation was once we start breaking below the prior low, we'd start to get a lot more aggressive to the downside. It was pretty aggressive anyway, from the 07s all the way down into 82s, but then we really started to accelerate down and trying to fill this gap. Now, like I said, it was very, very aggressive, that move down. There's your naked VPOC. That's really your target. You can try to see if you could run it lower, but any further than that, maybe to the gap 44s. That's maybe being optimistic, and at some point you need to say to yourself, I don't want to be too greedy. But remember our plan. Our plan was 21s and 07s, the value area low, 3 days. So we're going to have a look at how that played out on the 5 minute. Anyway, but before we do that, let's just have a look. As we touched into this naked VPOC, we touched into it, trading into the gap around about halfway through the gap. Now, this is something I always do when we have big gaps. I like to break them down into fractals. I've got like a 50% level. I've got my fibs as well, 68 and 32, whatever it is. So these are always like marked out as well, mentally or actually marked out on your chart. But basically, we traded into G period. Trump was talking at the time, and he said something along the lines of, China trade deal, we're going to work it out. And then we rotated really heavily all the way back up. Now, I'm going to just mention some of the clues that I use to determine whether or not I expect a directional trade for the day. But we'll look at that on the 5 minute chart, and I'll go through that, why there was the potential for this big rotation back up. But also we're trading Taco Donald, where a lot of news is coming out, and you need to be watchful for that. So let's just quickly have a look at this. This is basically some coupon codes, affiliate codes. Very much appreciated for everyone who supports the channel. You help make this video possible. Okay, just to show you that basically this is not just a debrief. This was actually a live trade. I actually posted about this in real time. I did that, and I don't normally do that. I did that on the Friday because I felt so strongly about this trade, and I really wanted to just highlight the importance of, one, understanding what you're doing, two, understanding what is to come, and three, trading your plan. That's weird. Trading your plan and seeing it to fruition. So this is a pretty, this is out there on Twitter. Basically, I was tweeting in real time once trade was on, getting some scales off. Here you can see I've got an entry. This was my entry at the 3-day value area low. Once I said that I was expecting basically the VWAP to start to hold, and then there was a news headline, which is not posted on here, but there was a news headline which gave me some bit of courage to put some more size on around this area for the move lower. But basically, this is not just a plan. This is not just a debrief. This is actually something that actually happened. Okay, let's just have a look at some clues. Off the open, this is basically the overnight session. you can see off the open we failed. This is this first circle here. Firstly, we failed to take out the prior settlement. This gave us a liquidation down lower, but we failed to take out the prior low, which is over here, and the overnight low. We rotated back up, and then we failed to take out the settlement again. But we did touch the monthly MPOC, and this basically started to grind lower. And as I said, at some point I expect this to start firming up, and it definitely did start looking firming up. This price action was very grindy to the downside, but once this started to fail to get above VWAP, you want to be thinking potentially this has got legs to the downside, given the way that this has been trading going into the session and what was potentially to come with the order flow. So after the data, we started to sort of firm up, start to hold VWAP, and then we've got that liquidation to the downside. Look at the delta as well. Definitely showing you that sellers were in charge once we had breached or touched that 3 month, sorry, not 3 month, that 3-day VPOC and the monthly point of control as well. So we had this very, very grindy price action low until we had a bit of luck with some news potentially, and then we liquidated to the downside. Look at the volume coming in into the lows. Always worth notice, see how we're trading. Volume is very, very important. You can see we have slightly elevated volume as well. We're going to have a look at the footprints, potential execution. So this is basically after we've touched the 21s, the monthly point of control. I'm kind of tweeting and basically saying I'm expecting this to start firming up. I'd taken a short there, managed to scale out there, scaled up quite aggressively because we hadn't taken out that prior low. Didn't like to see that. Came back up, back into POC. We just take it out. Find, looking for liquidity, buyers looking for liquidity, but then they get overrun. We also had that headline, which gave me some confidence to add some size onto this trade. What was key here is this break here. A lot of volume, stops going through that prior low, and then once we start to hold against that 58.95, then we have the run to the downside. And what's really interesting here is just to see how, once we hit those 21s, basically delta had only been negative, really, really seeing a lot of sellers. Pockets of blue where buyers were coming in, take advantage. We've kind of tried to hold the open range low. We did that really, really well to the tick. Then we kind of just broke slightly above the opening range high, but then sellers really took control, and things were starting to firm up towards the downside. What's really interesting to see from this, and why footprints are so important to me, is just seeing the way the market just it sort of animates itself, the magnitude of breaking this area here. Basically, these are all stops going off, lots of volume going through, and then people starting to panic as we move lower. So could have taken this short from multiple places. You could have taken it from the opening range high. You could have taken it from the 21s that was mentioned in the pre-plan, but you could also taken it here much later on into VWAP, looking for this move low, especially once that news hit. Basically, the news was that I've forgotten what it was now. Okay, I think basically consumer credit was worsening. That was what the headline was. Okay, so this is just basically the low. So we've looked at the potential entries on the footprint. This is basically as we're trading into the lows. Our target area was that naked VPOC around 58s. There it is there, the yellow line. You can see that we trade into it. Delta's declining all the way down there, and then we kind of spike through, and then look, there's all your buyers. There's people like me getting out. And then we start to see this grind back up higher. The key thing to kind of take note from here, from a professional trading point of view, is you have your targets. Okay, you want to be looking to get out or hold through those areas. Once those areas get retaken, you need to start asking questions. And in this case, once we start trading below 58, so we briefly stop lower, you start seeing delta reverse aggressively. There's that huge delta reversal up. And then what's key here is just this little circle here is this: it comes back to try to test 58, doesn't take it, that naked VPOC, right? And then it starts grinding back up high, and then it comes back to retest it. And then you see the delta really turn. And this is where we start seeing a short squeeze. And now I wasn't here, I wasn't there, so I can't really comment too much about this. But basically, I think there were some comments from Trump that basically said that US and China were going to work it out, trade tariffs. So I think that was some positive news. Shorts start to cover, bit of panic sets in, we start going back inside the IB, and then it gets messy for shorts. The short covering basically kind of carried on. This is basically, you can see basically once that low was once that low held at 58, I'm just trying to show you that, you know, after the news maybe hit, shorts start to cover. Look at the delta, it's only blue, one-way traffic. We start to regain IBs, start to regain IB mids, opening range lows, highs, and this just continues going higher. When you see this change, in particular, just going back to the prior slide, when you see that really important area 58 marked out in your prep, when you start seeing it break through, come back, regain, hold, and then hold again, you really want to be thinking, this is over, I need to get out of this. And I think you've been crazy to hold this all the way back up to, what is it, 77 from a low of 53s, I think it was. That's a really big hole if you're waiting for it to go back. I would not have done that. I got out below these 58s, I think 55s, 56s, I can't remember. But basically I just hit out. The trade was done. I'd accomplished what I set out to achieve, a great trade. Which was a combination of technicals, understanding of what happens at month end, and also a bit of news. Anyway, let's have a quick look. This is the short covering. You just see how delta is just kind of rising all the way up. I just want to highlight the last, the final hour of the session, last half hour. We turn red again on the delta. Okay, so what I'm trying to highlight is this little area here. This is the last bit, and you can see this is basically into the last 30 minutes M period. You can see the delta really aggressively turn down, and that is basically your month end. Those are people basically getting out of some of their positioning to rebalance their books. The market has basically gone up 6% for the month, so a lot of them are sitting on excess weighted equities, so they just want to lessen the load, and that's basically what's happening there. You can see that delta coming in, but it's been met with that short covering, so it gets choppy. Basically, the month end is taking advantage of these higher prices, but buyers are still short covering on the back of good news from Trump. Again, look at how, I always say, don't mess around in the middle. Always stick to your key MGIs, market generated information. There's your opening range high. Look at how it's holding once, twice, thrice. Don't trade in the middle, okay? And that's pretty much it. I'm not doing a ladder review of this, but I think I've said enough to kind of, whet your appetite regarding month end, how to view it, how I look at it. Of course, these are just my trading setups, but they work. What can we take away? So focus on the magnitude of the month end rebalance. So how far have you moved away from the open? Where are we trading relative to that open? What is the structure? In this case, we were pretty balanced, but we had this for the month. We had a double distribution. We were trading just underneath that monthly POC, which was at 21, which was really important. So structure, understanding structure is super important. Focus on your higher time frame MGIs for the month end. Really, that is basically what everyone else is doing. All the big traders, the big flows, we're looking at the big levels. So don't worry about your 5 minutes. Focus on the bigger picture stuff. Look for the increased flows that happens after the major data releases. That was the breakdown from 21s down into the 53s, a good 70 points. Look for the really strong delta into the final 30 minutes. I think that's really important to sort of highlight. And also, many people probably don't realize this, but the activity can really continue after the close. Often you see it just huge volumes carrying on. Sorry, not after the close. Activity can carry on well after the settlement into the close. So it really is something, especially in bonds, you see it a lot. Just a big continuation of the flows that are coming in right up into the close. Okay, and that's pretty much it. Thank you for watching, and catch you next time.